Hey everyone, this is Kobe Rex. I'm a licensed loan officer here in Colorado. I do business in Illinois, Colorado, Florida, and Texas. And I just wanted to quickly do a mortgage market update for November 2024. So welcome to the presentation. Let me start sharing my screen. Okay, so here we go. So as you can see on the right side here, I just wanted to share the rates of what we're seeing right now. So these are average rates. They're always going to be different based on what we're seeing for specific credit score situations, different amounts down, but this is just a starting point. So if we look here, the 30-year conforming, which is just your conventional loan, 6.701%. I know in Colorado, in a lot of other states, we have a lot of VA, average is 6.175. And then FHA is sitting around 6.35. And then as you can see on the bottom right, the 15-year is down right above 6. So what I wanted to take the chance to do real quickly is actually run you through what we're tracking. So we track two things for being able to see where mortgage interest rates are at. So the first thing I'm sure you guys have heard is called the 10-year Treasury. So the 10-year Treasury, as you can see, we do not like this going up. But unfortunately, as you can see, the trend since September 10th has been that it is going on an upward trajectory. Hopefully now with the election, we'll see what it does for that. But just so you have a little bit of context in terms of the last time we hit these numbers, if I back out to a year in the past, basically we're at the point where we were at the beginning of July. And then it got a lot worse at the beginning of the year, as you can see. But we definitely are in a position right now with the election that we're trying to figure out exactly where interest rates are going to go. And also, I know the Fed, the big thing they're tracking right now is the affordability of where everything is going in terms of the unemployment rate. Unemployment rate still, it does not look like it's moving the way that they want to, so they're going to continue to monitor that. They said that they're going to let inflation continue to ride without impacting that. So the last Fed meeting, they lowered the rate about a quarter, so 25 bips, quarter percent. That doesn't directly correlate with us. We saw about an eighth of percent of movement, but a lot of times you're going to hear we've already priced in that adjustment, which we have. Basically, we have people that are forecasting. And we're always trying to be on the front end in terms of where our pricing charts are at. So in terms of the inverse of what we do with the 10-year Treasury is actually what we call the 6-year note, which is the cost that it is. Basically what we can sell the loan for, and it's in the same position where it's basically mirroring what it was with July. We were doing a lot better. When the number goes up, as you can see up here, it's a lot better. It's gone down. So we're hoping that it continues to improve with economic conditions going into the new election with Trump. Okay, so now that we've done staring at eye charts, I want to go to focusing on our market insights. So with working with buyers, I'm seeing three big things that I want to bring to your attention. We're seeing a lot of buyers that are needing down payment assistance. So I can do down payment assistance in all 4 states that I'm licensed in. So I would highly suggest that if that's an issue with you, don't let it be an issue. We're very knowledgeable on how to do that. And it's a great tool to be able to qualify. One of the biggest things that I'm nervous about for a lot of your buyers is the holiday season, is that if you're going to, a lot of them are going to be tempted to run up their credit cards, which is going to hurt their debt to income ratio. So I don't know what you guys are doing in marketing in terms of just saying, hey, the greatest gift to yourself is to buy your next home. If that's where you're going in terms of helping them to preserve their debt ratio and make smart decisions, that would really help with us moving to the season into 2025. And then finally, I am seeing a lot of borrowers right now that are struggling to meet both the front end and back end ratio. The front end ratio is where we look at the mortgage payment compared to the total to their income, and then also looking at their back end ratio to their which is their total debt to their income. And we are seeing a lot of people having to get a cosigner. So mom and dad are still having a cosign, even if they're 30. A lot of them are having 1 or 2 kids, and they should be invested in making sure that their kids have a great house to go through their life. So I definitely am having to reach out to a lot of my borrowers and say, hey, you need a cosigner. Ultimately, I am seeing some good buyers in the market. We are still seeing, I mean, it's November. A lot of our markets are not seeing the summer bump that we normally see, but we still are seeing buyers that are not completely dissuaded and they're not all sitting on the sidelines. We do have some movement with people that want to move. Okay, well, I really appreciate you watching this presentation. I really would love to chat about how we could work together in terms of helping you and your buyers to be able to get to the closing table. One of our things that we have internally that is kind of cool that I really like is we have a for first-time homebuyers program that we call the Peaceful Pathway to Homeownership. So basically, it's an hour-long Zoom that it's not a Zoom, we do it webinar style. So that way, if you ever send a buyer over to us, um, everybody can't see who's there. So we want to preserve everybody's I want everybody to stay private so that way, because I want it to be a safe environment where anybody can come get the information. Of course, in the chat, you can ask questions that I can see, but I don't want to be, I want to respect if you ever choose to refer someone, which I really hope you do, that if there have any questions about the mortgage process in terms of getting down payment, getting their credit right, and also getting it so that their income ratios are correct. We go through all of those basics. They could ask them a question, and we want to basically be able to hand them over to you with a lot more confidence and get them excited to go buy a house. My contact information is right there. Feel free to reach out. I'm looking forward to having a chance to get to meet you here soon. And thanks so much for watching my presentation.